Welcome to this explainer. Go ahead, check your pocket. Seriously, that 100 rupee note you've got, it is literally worth less today than it was on January 1st. This is the silent crisis happening right under our noses. At the start of 2026, a US dollar cost 89 rupees. Today, it's pushed past 95 rupees. And nobody warned you. That 6 rupee gap? It's absolutely massive. It means the entire global economy is shifting beneath our feet, and you are quietly footing the bill every single day. So why is everything suddenly so expensive? Well, there are 3 massive global forces driving this squeeze. Let's start with something you do every day, your commute. Think about this. India imports nearly 70% of its crude oil, and every single drop of that imported fuel has to be paid for in US dollars. Late April 2026 saw this incredibly violent spike. Brent crude oil jumped 7% in literally a single day, hitting $111 a barrel. We haven't seen levels like that since 2022. What triggered it? Escalating conflict in the Strait of Hormuz. Roughly 20% of the world's oil passes through this tiny ocean strip. When that route gets risky, prices absolutely explode. Right, so here is the domino effect. Insanely expensive oil means India desperately needs more dollars. To get them, we sell rupees. Boom, the rupee's value takes a massive hit. Okay, force number 2 is all about investments. In the 2026 financial year alone, foreign investors pulled a staggering 3.33 lakh crore out of Indian markets. That's a huge exodus.
To put that in perspective, in April alone, over 70,000 crore rupees simply vanished. These massive global funds just packed up their bags and left in a total hurry.
You really have to ask yourself, why did they flee? Your local savings didn't move an inch, so what exactly shifted the ground beneath these giant funds? It's the future of tech. Global money aggressively chased the massive US boom in AI and semiconductors. And let's be honest, India simply isn't a major player in that specific space yet. So when these foreign investors sell off their Indian assets, they don't leave quietly. They dump absolutely massive amounts of rupees straight onto the open market. And then they use those dumped rupees to buy dollars. This completely floods the market with our currency. Too much supply, not enough demand. The value just crashes. Which brings us to force number 3, the almighty US dollar itself. It is incredibly strong right now because US government bonds are paying out an elevated 4.43% return. Global investors look at America and see 3 irresistible things: safe, stable, high return. Next to those guarantees, well, the rupee naturally looks a lot weaker by comparison. Now, our institutions are trying to fight back. The RBI even kept speculative bank currency trading at $100 million a day. But honestly, even the RBI can't fight a massive global tide alone. So let's bring this all back to you. Forget the big global funds for a second. What does a $95 actually mean for your day-to-day life as a consumer? Well, first off, petrol. That extra pain at the pump, that isn't just normal inflation. It's the direct cost of Middle East oil wars hitting your personal bank account. Second, electronics. Your imported phones and laptops instantly become more expensive. Importers have to pay in those stronger US dollars, and they pass that pain right down to you. Third, education. Planning to study overseas anytime soon? Your tuition and travel budgets just got significantly higher overnight, and you haven't even spent a single dime yet. So here's the really harsh reality. If you've got idle cash sitting in a regular account, a fallen currency is silently and swiftly eroding your hard-earned wealth. You didn't cause this global crisis, but you're sure living it. Now that you actually know the real reasons your money is shrinking, what are you going to do